OSRH, or OSR Holdings, spiked dramatically on trial news. The stock first surged 170% to $10 on February 19th on massive volume, even without major news, indicating a low-float momentum surge. More recently, on March 26th, OSRH soared 136.9% intraday to a high of $3.79 after announcing final Phase 2A trial data for its glioblastoma vaccine with a good safety profile, despite the news coming after the stock was beaten down to around $1.30. With a tiny float and previous pump-like spikes, the rally appears overextended and unjustified, making it a candidate for shorting if intraday highs fail to hold. But only enter once the squeeze is clearly over. Until then, take a long position. Old Point Financial, or OPOF, spiked sharply on April 3rd after announcing an acquisition deal with TowneBank at $41 per share, a 37% premium. Heavy volume pushed the stock toward the deal price, and the move is fully justified by the concrete cash offer, so it is not attractive for shorting. HIBS, the Direction Daily S&P 500 High Beta Bear 3X ETF, spiked in response to a broad market sell-off. Over March 31st to April 1st, it jumped 12 to 15% per day as high beta stocks plunged amid economic jitters and trade war fears. An April 2nd tariff announcement further triggered selling, with the ETF gapping over 20% before retracing 5% by close. This move is justified by market declines, but appears stretched, making it vulnerable to a reversal. Jiaoyude Global Logistics, or JYD, a recent Chinese IPO in the logistics sector, surged dramatically on April 1st with no official news. The stock opened at around $1 and shot up to as high as $7 to $8 intraday, driven solely by retail trading frenzy and momentum from chatroom pumps and algorithms. With a small float and high insider ownership, even minimal buying pressure caused an explosive spike. The rally is completely overextended, with no fundamental catalyst, and is highly vulnerable to a swift reversal. Northern Dynasty Minerals, or NAK, spiked when a Trump executive order on March 20th fast-tracked U.S. mining projects, rekindling hopes for its stalled Pebble mine. The stock surged from around $0.90 to over $1.20 on high volume. Although the fundamental catalyst is valid, the 35% plus intraday jump seems overstated and may fade once enthusiasm cools. XHLD experienced a notable intraday spike on minor news, such as a cosmetic buyback announcement, despite no significant business developments. As a very low-float stock, even trivial news drove its price upward dramatically. The rally appears overextended and unsustainable, likely to reverse sharply once profit-taking begins. Top 3 short picks for today are clear. JYD's explosive, unsustainable pump on no news, XHLD's overextended move on trivial news, and OSRH's massive unjustified spikes all present strong short opportunities. Monitor for signs of fading momentum and manage risk carefully.